Good morning, everyone who is watching this video. My name is Usman Muhammad. Our today's topic is trading profit and loss account. But before then, let me give you some kind of details about what trading profit and loss account is. Trading profit and loss account is an account prepared by a firm or an individual at the end of their financial year in order to identify the financial performance of their businesses. So this trading profit and loss account is mainly prepared in order to identify the actual profit makes at the end of their operations. So here with me is a question that I'm going to dictate it to you. The question said, the following trial balance was extracted from the books of Mr. Umar Enterprises on 31st December 2021. Purchases 368,400, sales 517,900, drawings 14,100, return inward 7,300, return outward 6,200, discount allowed is 10,200, discount received 8,400, debtors 45,000, creditors 57,100, stock 34,300, freehold premises at cost that 46,000, motor vehicle at cost 12,000, furniture at cost 2,500, provision for depreciation on motor vehicle 4,500, provision for depreciation on furniture 1,000, cash at bank 5,000, cash in hand 1,900, salaries 40,600, carriage inward 22,200, carriage outward 10,200, printing and stationery 3,600, electricity and water 14,900, insurance 6,800, general expenses 34,800, provision for bad debt 200, bad debt written off 400, capital 70,000, rent received 3,800, commission received 11,200, making both debit side and credit side 680,300. Then the following information should be taken into account. So the first one is stock at cost 31st December 2021 was valued at 31,800. Accrued expenses at 31st December 2021 were salaries 1,800 and electricity 80 naira. Prepaid expenses at 31st December 2021 were insurance 400 and general expenses 500. Adjust provision for bad debt to 2% of debtors and create provision for discount allowable at 1% of debtors. Commission due but yet to be received at 31st December 2021 amounted to 800. Charge depreciation on fixed asset as follows: furniture 20% on cost, motor vehicles 10% on cost, rent received in advance at 31st December 2021 amounted to 200. Goods costing 1,200 were taken by the owner for private use. This was yet to be reported in the books. Using the horizontal format, prepare trading profit and loss account for the year ended 31st December 2021 and the balance sheet as at that date. So now our own concern is trading profit and loss account. And as we already know that trading profit and loss account has debit and credit side. So now we are going to write the names of the enterpriser, which is Mr. Umar Enterprises. So, Mr. Umar Enterprises, as you have been given a question of trading profit and loss account, this is the first thing that you are supposed to do, which is you are going to write the names of the enterpriser. Then followed by what? Then followed by the names of the account. Trading to be debit A, credit A, naira sign, then trading profit and loss account. So now, since we have been given a question, we will look at our question. What is the cost item if we are going to look at our format of this trading profit and loss account? The first item is what? Opening stock. So we are going to say opening stock. How much was it? 34,800. If we check, we will see 34,800. So what next? Then the next is purchases. Purchases. Add purchase. What's our purchase? Our purchase is 368,400. Then what next? The next thing is add carriage inward. Carriage amount is how much? Is 22,200. This carriage amount is the money we paid for transporting the goods we purchased from the supplier. So this carriage amount is not like a money you paid for the transport of your goods into your shop. So now we want to add this 3. So what we got is the actual amount we are going to put, which is 424,900. 400,900. Then what next? The next thing is there is in our original information they say that the goods taken by the enterpriser, that is the sole proprietor, but it was not recorded in the drawings, that is, it was not being considered. So now, since we have been informed, we want to less this amount from the actual amount, that is from our actual cost of from this amount. We have to less the good taken by the owner for private goods, which was not being considered. So now we have to less it, that is less goods withdrawn for private use. Is 1,200, then minus it from here. Then what we get is 423,700. Then what next? Then there's goods return. Goods return, that is return outward. Return outward. It means you purchase a good, but unfortunately you find some kind of default or some kind of error from that kind of goods. So you have to return it to your supplier. So that is why you have to less it from your actual normal goods. Since let us assume you are selling at least just like funds. So unfortunately, when you order it, you find that there is one fund that has gotten a fault, so you need to return it. So after you return it, now you have to less it from your actual normal goods. That is why we are lessing these goods return to our suppliers, because we want to know actual what we have. So now we are going to say less return outward, which is 6,200. Return outward is how much? Return outward is 6,200. How much? The value is cost of goods available for sale. After we less our cost of goods return outward, we are going to get cost of goods available for sale, which is 417,500. Is 417,500. Then what next? Then from this cost of goods available for sale, we are going to say less closing stock. The remain unsold goods of this year remain unsold. That is, we are going to less it because we want to know the actual what we sell, what we get. As we know, accounting is based on narration, giving the actual what happened. So now we want to less the cost of closing stock of this year. Less closing stock. Closing stock is how much? If you check the additional information, they say stock on 31st December 2021 was valued at 31,800. So minus it from here. Then what next? The value we are going to get is cost of goods sold. That is the actual cost of good you have sold. Let us assume you are selling just like pounds. So before then, you need to at least there is some kind of costs that you will incur before you add the profit on that normal pound you are selling. So now cost of goods sold is the actual cost of that pound before you add your profit on it. That is, we are going to say cost of goods sold. If we say this minus this, it's our cost of goods sold. If we say this problem this way, we are going to get 385,700. So this is the cost of goods available for sale. So now what we need is we have to say sales. Sales is the actual sales is just what you have already sold. That is your cost plus the profit is the sale, but summation of the total transactions at the end of the year, not single. It means the total of your sales. We are going to say sales is how much? If we take the trial balance, it is 517,900. So unfortunately, out of our sales, then there is some kind of goods returned by our supplier. So now we need to less that since returned by our supplier because it's not because account is all about giving a comprehensive detail and concise. So now we are going to say less return inwards. Return inwards from our person is 7,300. After we less it, we are going to get our net sale, the actual sale. Net sale is how much? 510,600. This is our net sale. So now we want to find our gross profit. Our gross profit is the profit before deduction any kind of expenses incurred with. So now we want to say our sales minus the cost of goods sold. That is our gross profit. So now we want to consider which side is greater. This side, the net sales is greater than the cost of goods sold. So now we want to say our sales minus the cost of goods sold, we will get gross profit carried on. If we say 510,600 minus 385,700, we are going to get 124,900. This is our gross profit. So now we want to balance the account with the highest figure. The highest amount is 510,600. Also here 510,600. So now we reach the end of trading account. We are going to the next part, which is profit and loss account. So having there is a lot of space, there is abundant space. We are going to continue from here up to the final account, up the end of the account. So now since there is no space, let us move to there. But in your sheet, in their favor, you are going to continue from here up to the down if it is available. So now since it is not available, we are going to move to this side, which it is supposed to be like this. At least all the expenses are in the debit side while the incomes are in the credit side. So now we are going to say expenses.